number that has been worked on.
The first half year has been somewhat challenging period for us in business. We have seen volatility in the currency and the stock markets and erratic movements in the oil prices. In April, in Malaysia, we saw the introduction of the goods and services tax, which, as you all know, has some impact on consumer spending in the immediate period thereafter. We've also seen in Europe the impacts of the Greek debt crisis, and earlier this month, in fact as recently as just this week, China's move to devalue its yuan, and that has sent jitters in the international markets. And therefore, against this backdrop of many global events, we at Maybank are very pleased to report our first half-year performance for 2015, where we recorded a net profit of 3.28 billion ringgit, and that's a 3.4% increase from a year earlier, with a return on equity of 12.1%. The challenges remain, but we're quite heartened by the results that we have achieved. When you consider our top line, the net operating income has continued to grow strongly. It grew 10.8% year on year to reach 9.88 billion ringgit. And that's driven by almost all of our business pillars: consumer financial services, international banking, global banking, insurance, and takaful. We at the board has just decided that we will declare an interim dividend of 24 cents per share. And this will comprise of 4 cents per share cash, with the balance of 20 cents electable under the dividend reinvestment plan. So, ladies and gentlemen, as we look at the rest of the year, the business environment will remain very uncertain. It will continue to pose challenges to all in business. We at the bank, and also in our other financial services, we will continue to support our clients to try to find opportunities amidst this turbulent business environment.
However, despite these challenges, we managed to record what we call as a decent performance for the first half, as you can see in slide number 2, right on in front of you. In the first half of this year, we saw a top line growth or revenue, more robust growth, about 10.8%, contributed both by a better growth in fund-based activity and also fee-based income as well compared to what we saw in the same period last year. Loan growth across our key markets have also been stronger in the CFS space, or rather the community financial services space, or retail banking space, in combination with strengthening of the foreign currencies as well, relative to ringgit. The group's loan growth came in at about 11.1%. Net interest margin has contracted slightly, 3 basis points since December 2014, a slower rate of contraction than we have seen previously, so that's a good point. Commiseration, actually.